Hello my friends. Today I'm going to go over one of the oldest strategies and used by almost all the traders in the financial markets, which is called Dow Theory. The Dow Theory is the foundation of all technical analysis. Itself is a trading system. You do not need to use any indicator. It is purely based on price action. Understanding that the Dow Theory is like learning how to swim. Once you learn the swimming, you can navigate through any treacherous waters. Same way it goes for the Dow Theory. Once you understand, the Dow Theory lets you swim through no matter how tough or how rough the market is. Okay, point one. Three types of trends. Primary trend, a long-term trend. It lasts for months. Then you have a secondary trend, a mid-term trend, which is pullback, usually go against the primary trend. Then you have a minor trend, a short-term trend, usually used on day trading. Point two, identifying the base point or a 0 point. On another word, on an uptrend, where the trend started from. Same way it goes for the downtrend, identifying the base point or a 0 point. Another word, on a downtrend, where the trend started from. Point three, for the beginner level, you can use 200 EMA to identify the direction of the trend. Example, above 200 EMA, it's an uptrend. Below 200 EMA, it's a downtrend. Point four, for the advanced level. Trend has two phases. An accumulation phase, which is continuation of the trend. It breaks out to the upside. Then you have a distribution phase, mostly reversal of the trend. It breaks out to the downside. Okay, before I open the actual chart, let me give you a brief demo how a trend look like. Okay, so this is an uptrend look like. Okay, and same way it goes for downtrend, starting from here okay, look at my higher highs, higher lows, higher highs, higher lows. The same way goes for downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Okay, this is how an uptrend and a downtrend look like. Okay, now how do you spot a trend is in motion? Well, this is my way. You can learn many other ways, but this is what the way I identify a trend is in motion. Okay, one, two, three. As soon as I spot 1, 2, 3 moves, say it crossed this high, I know a potential trend is in progress. So now what I would do, I would wait until come down somewhere here, then I will be in the trade. Okay, so my stop loss would be, this is my stop loss. Okay, and I got into the trade right here. It's going to pull down to somewhere here nearby. Okay, if it is a real trend, it should not cross this low, this line. So now you see, I got into the trade, and then what I do, simply I'm riding the trend. Every time it makes new higher highs, I move my stop loss to the new higher lows. And I'm keep doing until either I get kicked out or I notice something. Now, and this would be, see, remember I pointed out I said the base point. This is my base point. Or you could say 0 point right here. The trend is actually starting from here. Whenever I spot this 3 moves, 1, 2, 3, I know the trend is already in progress. So this is my way, but you can learn other different ways. But basic idea is, as soon as you see 1, 2, 3 moves, or like you could see ABC move, you know there is a potential. A trend might be in progress. Okay, so let me delete this. Now you have to understand one thing, my friend. Trend is not forever. Some point the trend is going to stop. Either it will rest or maybe it will reverse. So how do you identify the trend is in is it going to reverse or is it going to continue? Well, there is so many price action patterns that you could use and identify. For example, I'll give you one example. Okay, let's say I got into the trend right here, somewhere here. Okay, I ride it, went up here. Now I can see potential. You see, this is a head and shoulder. As soon as I spot a head and shoulder, this is a very effective price action pattern. As soon as this is the left shoulder, this is the right shoulder, this is the head. Okay, as soon as I notice the head and shoulder, I know the trend is about to reverse. You can use wedge formation, rising wedge, falling wedge, the flags. There's so many other price action patterns that you can. I cannot go obviously all of them because it's going to require, the video might be 2 hours long. Or sometimes if you, let's say you don't have much knowledge about the price action, if you see, like, look, you got into a on a trend. Now all of a sudden you see went there and now just bouncing back and forth. This period we call consolidation phase or a sideway. Now the trend is, whatever way it breaks, give you the breakout. If it breaks out from here upward, then you know the trend is in progress. In continuation phase. If it's break out to the downside from here, then you know it's the trend is about to reverse. So anytime it breaks out to the above, then we say accumulation phase. And if it breaks to the downside, then we say distribution phase, because it's going down. Accumulation, you are basically adding values. Okay, so now let me go over to the chart. You will have a clear understanding. Okay, now I open the real chart. Okay, So I'm going to do the Dow Theory analysis here. This is a currency pair, Euro versus New Zealand dollars. Okay. As soon as I notice right here, look at 1, 2, 3 moves. 1, 2, 3. Now I know from my experience that I could notice now there is an uptrend in motion. Okay, so now how I would be trading this. Okay, so what I would do, this is my, by the way, this is my base point. Okay, now I would draw a line right here. Okay, I would wait for the stock to pull back somewhere here. Obviously you don't know the exact point, somewhere in between here. Okay, but here I noticed something. With the help of the candlestick, there is a bullish candlestick right here, and this is my zone, so I know it is safe for me to get into the trade, and I could ride the trend. Okay, so somewhere here I got into the trade. Okay, I put my stop loss somewhere here. Now as the trend is progressing, look at this high. Okay, so this is my higher high, this is my higher lows, this is my higher high, this is my higher lows, this is my higher high, this is my higher low, this is my higher high, this is my higher lows. Okay, and I'm keep doing it right here, higher highs, higher lows, higher highs, higher lows. Okay, but you have to understand one thing. When you are trading on a trend, you have to use what we call trailing stop. So remember, first my trailing stop was here. Now as soon as it crossed this high and make it another higher lows, I move my trailing stop right here. Then again, as soon as it created higher highs, and I would wait for the higher lows, then I would move my stop loss somewhere here. By doing this, look at, I'm keep moving. Now I went all the way up here. Okay, now this is my higher highs. Okay, now as you can see here, it came here acting as normal, but it went up here and then came back again here. It actually kicked me out because my stop loss was somewhere here. Now, but I made money because I got on board from here to here to here. I made money. Now what I would do, I would draw, this is, now I know, so giving me some kind of signal that the trend is in resting mode, or maybe what do we call in a consolidation phase. So I would not trade now, I would be an observer. So from here to here, my no trading zone. Okay, now you see something, look at it creating like a zigzag. Now right here, so now I create this, I draw a line here and I draw a line here. If it cross above the higher highs, then I would be on a long position. If it breaks below this line, then I would be in a short position. So now if it cross above, then the trend is still in progress. But look at here, it broke here. So I know the trend is in reverse position. So what I would do, look at this again, I would simply use my old technique, 1, 2, 3 moves. As soon as I saw this 3 moves, I know this the trend is in downtrend. So now I would wait to pull back somewhere here and I would be on short position. So now I would do the same thing. What I did on the uptrend, I would be doing same thing. Look at this. This is called the lower lows, lower high, lower lows, lower high, lower lows, lower high. I would ride until it kicks me out. Like right here, look at here, actually kicked me out, but I made some money from here to here. Okay, so this is how you trade Dow theory. And let me give you another example on the Apple stock. Look at right here. As soon as I saw 1, 2, 3 moves, I know the uptrend is in motion. So now what I would do same way. Look at something. As I was doing the analysis, I noticed something. Look at Apple. See, it kicked me out right here because that was my last uh, right here, somewhere here. Okay, it kicked me out. Okay, as soon as, so I would draw another line right here. This is my last higher highs. This is my um, higher lows. As soon as I got kicked out, okay, I'm not going to be in there. I'm going to be just an observer. Okay, now as you can see, again I could see made 3 moves. As soon as I saw these 3 moves, I would wait to start to pull back somewhere. By the way, I'm doing this analysis on 9/28/2023. I could notice something that Apple is on a downtrend. So I would short the Apple somewhere 185, and then it will go like something like this. Okay, I would ride the trend until it kicked me out. But somewhere here, I notice my first target would be somewhere here. This is my first target, somewhere 157, right here, my first target. But I could use the trailing stop, so I could go as far as I can. Okay, so this is how you trade Dow theory. If this video enhance your trading, please subscribe my channel, hit a like button, put a comment, so it will motivate me to do more videos like this. Thank you for watching this video.